Welcome to Philstake YouTube channel, the unfolding of the stock market crash. Well, this week, did you notice how they were talking about the yields? You notice how they were talking about, oh, it's no problem. You can be in both the value stocks and you can be in the growth stocks, because they don't know what to do with the yields, because the yields are the biggest thing. Remember, what tells the truth? Not the fake business news network. What tells the truth about the economy that you can depend on, if the economy is getting better or worse, is the yield. When yields go down, and think of yields below 150 basis points on a 10-year treasury, that means the economy is really getting bad, okay? Really getting bad. And we've been at 125, 145, economy getting bad. And the problem with that is it helps the big tech stocks, and it drives the big tech stocks up, which pushes up the S&P. But the problem with that, people have been taught and trained like monkeys to look at the stock market to get a read on the economy, when the stock market has nothing to do with the economy. So they've been lying to everybody, creating a solution, because yields are so bad. Why? Because the economy is so bad, but yields are great, low yields, for big tech stocks to go up. And when the tech stocks go up, take the S&P 500, 26% of the tech stocks drives the whole S&P. So people see the S&P going up, they don't understand. It's going up for the wrong reason, because you got a small group of tech stocks that are so powerful, it's driving the whole market up, and people think everything is great. And as a result of that, they continue to lie about it. Now, they say is inflation, all this inflation is transitory or not transitory. The inflation, okay, is not transitory. It's there, it's going to stay there. What's temporary and transitory is the stock market, because they got to raise rates and there's too much debt, and the minute they raise rates, the big tech stocks will crash. Now, let's go to my chart. After, I'm going to first have you play this transitory cut.
The Fed is right that inflation is transitory.
We cannot act like inflation is transitory.
Inflation is inflation, okay? Believe me, once you have inflation in your system, it's not transitory, okay? Because like when you raise rates, it takes 18 months to get through your system. When you lower rates, same thing. Inflation, same thing. Once you got inflation, it takes too long to get out, The only thing that's transitory is the stock market. Here, let's look at my chart. Now, if you notice, okay, in 2008, the stock market went up 400%. It went up for the wrong reasons. It didn't go up on better margins, top line sales, and increased net worth. None of that. It didn't go up what usually drives the stock market. It went up on debt. And here's the debt. Look, the debt went up 336%. Think about this. We had to increase our debt 336% to drive the stock market 400%. What are you, nuts? Now, take a look at this. Take the $120 billion right here. This is what's propping up the stock market. The $120 billion a month is to purchase treasuries to keep rates at zero. Look at the $100 billion a month. The $100 billion a month is for buying stocks back. You know, the stock buybacks. They're printing money to give the CEOs to do the stock buybacks, propping up the market. Look at the $180 billion. The $180 billion a month is for buying mortgage-backed securities, and that was bailing out the banks to keep the fake housing market going. If they didn't do that, the housing market would collapse. Then they put another 120. This is all propping it up. 120 billion a month to monetize corporate debt. All these corporations, 27% of our corporations should be filing foreclosure. They're not, because we're going in and buying their debt. Now they're printing another 100 billion every month. What's that for? That's for government debt. We're going in and buying, the Federal Reserve print money, going in and buying the government's debt. It's called monetizing debt. Monetizing debt, because they don't want interest rates to go up. Next, the $215 billion a month. What's that for? To purchase bad bank debts called robo money. Banks at night when they're done, they don't have enough money to open the next day. We've been going in every day since September 2019 to give enough money to open up every day. This 3 weeks ago, we had to give them almost $1 trillion one day. One day. This is all. So all this propping up comes from all this debt. There lies the problem. Now, the minute that they raise rates, and they're going to have to, they have no choice, that's when this market will crash. So keep your eye on the rates, okay? Now, if it's anything above 150, get ready. Now, here's the other thing. They're telling us how great the economy is. They're saying, listen to this, all the cash people have.
The consumer has a ton of money, a ton of savings, has reduced its credit card debt, and is eager to get back and live.
Where is the crisis when we're saving more than at any time since World War II? There's well over $2 trillion in bank accounts, and we've paid off a ton of credit card debt.
What a bunch of lies that is. First of all, when you're telling you how much money's in savings accounts, they don't break it out. It's an aggregate. They're putting in Bill Gates. They're putting all the big trillionaires and billionaires in. If you took out the 157 million people who work in this country, 72% of those people are working check to check, right? Paycheck to paycheck. They're not reflecting that. They don't reflect that. It's a whole bunch of nonsense. Don't listen to them, okay? Now, here's the other thing. Here's the only thing you've got to remember, okay? If this economy was doing so well, then why the hell is it that we are giving people kids $300 per child? Why? Why? Things are good. You don't do that. Why did we take $10 billion, print it, and give it to people to pay their back mortgages, their utilities, their association fees, their real estate fees? I mean, their real estate taxes. If things are good, why would we be doing that? Look, it's all lies. Finally, let me show you. You're going to watch the rates. I hope you join my gang. You see how great this works. Okay, look over here. Okay, look at the big tech stocks right here. See the big tech stocks? See how they're going up? And you see how the bank stocks are going down? That means you got to stick with the growth stocks. And why is that? Because the growth stocks do well when interest rates are down. And they're going to keep forcing interest rates down to keep pushing up. The only thing they got is what? Big tech. Please believe me. Listen, look at me. I'm telling you, when they move those rates up, and they're going to have to at some point, they got to move them up at some point, the big tech is going to roll over and collapse. It's going to take this whole market down. Believe me when I tell you that. Why don't you join my gang for just 10 days? It's free, okay? You'll see, okay? We know what we're talking about. And by the way, please share this video. Please hit like and please subscribe, okay? Really would like you to join my gang for 10 days. Try it and always listen to my radio show. It's free every day on my YouTube channel, okay? See you on the charts.